The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision. The company discussed in this episode was a personal investment of the host. At no point did the host invest client accounts or advise clients to invest in this company.
Hey everyone, welcome back to another episode of In the Market Trenches. Glad to have you back. If you're new to listening to us, remember you can check us out on our blog, www.accretivewealthpartners.com. We're also available anywhere podcasts are available. You could find us at inthemarkettrenches.podbean.com. You could find us at snn.network, and you could find us on the SNN Network YouTube channel. That's youtube.com/SNNwire. Gary, good to see you. We're not in person this time. I'm kind of bummed.
Good to see you. Yeah, you have an enchanting musk, and I miss it.
Yeah, you're wearing your podcast recording shirt.
That's right. My son, for those listening, my son saw me in a collared shirt, and he said, "You must be going on." He's 6. He's like, "You must be doing a video call." He's like, he wanted to join. Maybe we'll let him pop his head in. If you hear any screaming, it's daddy daycare here today for me. So.
Oh, good for you. Yeah, I'm at home and I have real daycare. So it's the first week of that. It's been fun. It's been a relief.
I'm envious.
So the story that we have for you today, if you recall in our original podcast, we said sometimes we're going to name the name, sometimes we're not. This one we are, and we're excited. We can name the name because it's no longer listed. And when Gary and I were talking about what we wanted to do for this week, we thought, well, we're facing a wave of corporate bankruptcies, so let's talk about a bankruptcy situation that we're involved with. But still, even though it's not listed, just keep in mind that the time period that we're involved with, it's just a moment in time. It's not a reflection of the company before they filed, after they filed, where they stand today. This is just us recounting our experience with this company. So with that said, Gary, what are we talking about?
Yeah, I think I'd also just add that we're expressing opinions, and our opinions are, of course, our own. So, and this is, to be clear, we do this stuff personally, and these are personal investments. We're not advising clients to do any of this stuff. And before we get going too far into it, I just want to make that pretty clear. But
I want to know the name. What's the name? What are we talking about?
Oh, so we're talking about Ironclad Performance Wear.
Yes.
Is that the full name? Because I kind of forget.
Ironclad Performance Wear Gloves, which was renamed ICPW Liquidating Trust at some point.
Right. So, how did we find this one, Eric?
So
take me all the way back to the beginning.
So we originally came across this name. We were at an investment conference, and I think you and I were doing our rounds at various corporate presentations, and we just heard, and everyone looks over. We hear the banging, and there was just someone at the table with a hammer banging his hand who was wearing gloves. And that's how we came across the name.
So to give listeners some background, these conferences, sometimes they'll do like tables where you go from table to table meeting the different companies. And like every 10 minutes or so, you would go to a new table. And every 10 minutes, like clockwork, we were hearing bang, bang, bang on the table. I'd never heard anything like it. The guy had an actual mallet and he was banging on the gloves on the table. And I'm like, what the heck is this? And so this was a smaller. This is a conference that was focused on these tidier companies. And when you go to these conferences, they're sort of like I sort of liken them to entering the Star Wars cantina. You got every single kind of like charlatan. I'm not going to say charlatan, but every single type of weird thing you could ever expect to encounter at these things. And like you and I are there. We're just. It's like we wandered in and we're looking for Han and Chewie.
Yeah.
I want Han Solo. Did we find Han Solo that day?
Every now and then we come across one. I don't know if we did that day. But anyway, I mean, we're talking about this one today, so maybe we did. I think he was the last presentation for us for that day.
Yeah, we had a guy who sold the prettiest modems in all the world. Remember that? His whole pitch was, we have the prettiest modems. I was like, I don't understand. And then we had, wasn't there like another one that was like police training,
yeah.
like in like,
Mhm.
some
Yeah,
other
with the
a whole
virtual
bunch
reality.
of stuff like that. And then we got the guy with the mallet, and we met him, and we were like, this is kind of weird. And then the guy's like, just send me an email. We'll send you a free pair of gloves. And I'm like, that's sort of weird too. Like, and I never sent him an email. Did you ever get a pair of gloves, Eric?
No, it was a pass for me.
Okay, so that was probably, I don't know, about 2 years before they filed. Does that feel about right? That we encountered them?
Yeah,
Or
because
was it
I think they filed in 2017, and so it's probably
Yeah.
2 years before they filed.
Yeah, and so we were not involved in this in any way, shape, or form until after they filed, actually. And I guess just what was the reason they filed?
So if I remember right, they had tripped one of their covenants, and so and then after they tripped one of the covenants, one of their competitors came in and bought the debt from the bank and then forced them into bankruptcy.
Right.
Is that
So what was
that sound about right?
the covenant that they tripped was, that sounds right. The covenant they tripped was, they had some internal control issues relating to, I think, revenue recognition.
Right.
And so but as a result, they couldn't put out up-to-date financials. And that was one of the covenants that was in their loan agreement. And so one of their competitors, as you mentioned, basically bought the loan out from under them and pushed them into a restructuring and set themselves up as the stalking horse bidder. And so the way we came about the liquidation.
By the way, which is just super interesting. And I think when we talk about bankruptcy situations, we've been involved in a handful of them. I'm sure we'll talk about them on the podcast in future episodes. But each one is kind of its own animal that you have to really look at and examine with a fine-tooth comb. And so that was just super interesting, very creative of the competitor to buy the debt and to push them into the bankruptcy. And they acted as a stalking horse in an auction.
Well, they basically loan sharked one of their top competitors. It was I thought it was super bright. I had not once considered that was possible. But if you live long enough, I guess you kind of see everything, and that's something that kind of goes into that everything bucket, right?
Right.
So let's see. So they had the issues with the revenue recognition that forced them into this process. I think at that point, the CEO and the CFO were dismissed. I think a little before that, right?
Yeah.
And so so I have sort of keyword alerts set up for a variety of things, and one of them is in all SEC filings. I want to see if the phrase stalking horse bidder or stalking horse is in a filing, and whenever that happens, I just kind of give it a quick look, and 9 times out of 10 or 19 times out of 20, there's not much else to really do. You just give it a look, and you sort of move on with your life. With this one, it was kind of interesting because you had this it was a unique fact pattern that resulted in this. And it seemed like there was more to the process prior to them actually, going through this restructuring and auction and whatever else. So it seemed to me that
for people that don't know how the bankruptcy process works, like what does it actually mean to be a stalking horse?
So that, essentially, you're serving as the primary bidder in terms of for a company's assets. And so if they're going to hold an auction, they have to go through the process to see if there's a superior bid out there. But if you're sort of in the front position, and so and if an auction winds up developing, then you're in an auction situation. But if nobody else shows up, well then you sort of get the assets for whatever the asset purchase agreement says. And so that's really it. And so we sort of looked at the stalking horse bid and thought, well, we're not sure that there's anything left after accounting for all of the expenses to sort of wind this down and whatever else. But this company has sort of an interesting history. Maybe there's some causes of action that might be left in the estate. Maybe there's some other stuff going on. And we sort of just kept an eye on it. And normally this one was kind of unique in the sense that a lot of times when you have these sort of restructurings, there's a host site the host site, it's actually free to access. In this instance,
Yeah. So
they
some of
actually
those
didn't
host
pay
sites,
for a host site.
yeah, and so some of those host sites, the popular ones, Prime Clerk is a popular one, KCC is a popular one. Everything goes through an official site, which is Pacer.
Right.
And so you could search for you search based on the court system that they filed through. If you have a case ID number, you'll put that in, and then you can get all the documents related to that case and all the information related to that case. What else should they know about Pacer, Gary?
Pacer charges you per page. It's 10 cents a page, and it's up to 30 pages, so it's a max of $3 a view. But if you're not careful with it, that's not like per document ever. It's every time you click submit. So I think at some point during this process, I got a bill from Pacer for like $1,000, and I was like, "What the heck?" And it was just for like searching the docket, and we didn't know that that it was on essentially a per use basis at this point in the process, because we'd always used the host sites, and those were always kind of free. And so we had to write letters to Pacer. We said, "Listen, we're not really attorneys. We're just we don't use the site all that often." And, we searched this same thing multiple times a day, a number of different times. We rang up, $30 in charges a day, basically following this thing, because we're just refreshing the screen. And so they were kind enough to overlook the vast majority of it. And I got to a very reasonable place with the bill for it, but it was definitely a learning experience in terms of how one consumes Pacer.
Yeah. And so what we were looking for was, it was two things. It's one, we wanted to understand what the auction process was. And then two, we wanted to know the timeline for when the auction process takes place, because there's a period of time where people can raise their hand and say, we want to show up to bid. There's the actual bidding process. Then there's an objection deadline. Then the bidding gets finalized. And basically the winner gets awarded. And then whatever happens next, happens next. And so that's what we were looking for, the timeline and the rules of the auction.
Right. And so in this particular auction, anybody who wanted to show up had to post a couple $1 million, right?
Yep. So if you wanted to show up, you had to, your incremental bid had to be $750,000 above the previous bid. So what's that mean? So you have the stalking horse bidder. If one bidder shows up, it has to be $750,000 more than what the stalking horse is willing to put up. Also, they had to put $2 million down just to show up. It was refundable to them if they didn't win, but they still had to show up with a bag of cash and say, we're serious. If you had two people show up, then you start getting a real auction. And so that's what we were looking for. There was a real auction going to break out.
Yep. And so basically for us, we were checking the docket, trying to see, what was going on with this, because the auction, there was a deadline for submitting bids for the auction. So that kind of came and went. And I don't know, it was around that time, it was clear that from the docket that there was not going to be one, but two additional bidders posting this kind of collateral with, a bid that topped the stalking horse. And so it was pretty clear at that point that now that we've got three parties at the table, a real auction could break out. And that was when we got involved. That was when we decided to get involved. We didn't know how the auction was going to turn out. We didn't know anything really else beyond that. But we do know the dynamics and human behavior. If these companies went through all this trouble to go and put through a bid and post the collateral, that they were serious buyers, and they were also they were not financial sponsors like a private equity firm. These were competitors, and there were some real synergies to be had by folding. This company had problems, but it did have a real operation, so there were definitely some synergies to fold in there. And so what wound up happening was, we didn't know how the auction was going to turn out, but we felt good enough to do something. And what did we learn? A couple of days later, about a week later, they had the auction. A couple of days after that, we learned that it was the result of the auction was not so bad, right?
Right. And I thought what was interesting is all throughout the way, you had multiple entry points. It wasn't, if you were vigorously refreshing the screen like we were, and you were kind of you knew what you're looking for, and you're probably one of the first to see it after the attorneys, the judges, and whoever else was involved. I mean, you were still able to buy at decent prices. So the first point was when we learned that there were other bidders showing up, and even after they announced what the final results were for the bidding process, there is a lag between when the stock reacted and when the news hit or when the document hit the docket.
Yeah, so I mean, so what we found in these things is that there's oftentimes a good amount of latency between when something is out there and when people figure it out. And so sometimes if you're paying close enough attention, there's an advantage in paying close enough attention, and that you can come up with an analysis and figure out what's going on just a little bit quicker. And for us, we had some estimate of what we thought the wind down costs were going to be. We had some estimate of what we thought the claims were going to be. And ultimately, the auction result was, we felt it put the equity in the money, and we weren't sure quite how far in the money, but we felt like it was pretty well in the money. And that was before considering, maybe if there were some, legal rights that stayed in the estate that maybe that might accrue. Of course, you have to offset that sum with maybe the cost to pursue that stuff. So we really didn't know. We sort of we put a big question mark there in terms of how much they would spend versus how much they would get. But the good news was after they had a successful auction, there was a trustee appointed and a committee of a couple shareholders that had a decent stake that were going to sort of oversee, how things progressed from there. And so. What else am I forgetting?
So I'd say the other thing to keep in mind with some of these bankruptcy situations is, oftentimes they'll delist. And so you may see the shares get removed from your account and replaced with a QSIP. So if you want to know if it's going to delist, you could always check out FINRA's daily list, and it'll tell you. You can search the symbol. It'll tell you what's going on with the symbol. It'll give you the details. I'm sure in a later podcast we'll go through how to actually look at FINRA's daily list and go through that and what all the codes mean, because we had another interesting situation with that. But you'll understand what's going on in your brokerage account, and then as you get that QSIP, if the equity was entitled to any money, they'll distribute it through the DTC system, and that's how you will. If it goes through DTC, that's how you would eventually get paid as an equity holder. What else am I missing?
Yeah, and you got to be sort of careful, because the custodians, some of them, all of them, sort of treat this stuff just a little bit differently, right?
Yeah, and so I'll talk about my personal experience here, and this is what I learned. Is you really, if you get involved with these, you have to carefully document exactly what's happening. So I use multiple custodians just because I want to understand what the experience is at different custodians, and they handle this stuff differently. So one of my custodians actually removed the symbol and removed the QSIP from my account. Now, I was sitting here as an equity holder thinking, I think I'm entitled to a distribution in the future. And the response I got was, well, if you are, we'll figure it out. We'll make sure you get your money. Another custodian kept the QSIP in the account. Yeah, trust us. Is essentially what they said. Another custodian actually kept the symbol in there, which I thought was kind of weird, that there wasn't a best practices across custodians. So I ended up writing a letter to the one custodian and just outlined to them and said, hey, this is what another custodian did. I really think you made a mistake here. And again, they just said, trust us. So I just kept a copy of that letter. I printed out the most recent account statement that showed them removing the QSIP from my account, showed the quantity of shares I had, which was fine. Eventually, a distribution got paid. I know, because the custodian that kept the QSIP in my account, the cash hit. And so it was like, okay, great. And I went to the other custodian, no cash, for day 1, day 2, day 3. So I reached out to them, and they said, yeah, no, we don't see anything. We don't see anything. That company is filed for bankruptcy. There are no distributions. Yeah, not quite. Here you go. And so, I just sent them a big packet of information. I asked them to put the QSIP back in my account. They didn't. A second distribution came through. I knew again, because the custodian that had the QSIP told me, and the other custodian said, It was just the same process. And so you really have to stay on top of this stuff. I was also in communication with the plan trustee, who is great. I would say don't be afraid to reach out to these trustees. You want to know the parties that are involved. You want to know who represents the company that filed for bankruptcy. You want to know who the trustee or the plan administrator is. Feel free to, you're an equity holder. Ask questions. They get questions all the time. And so that's okay. It makes you more informed, and it gives you more ammunition if you got stuck in the situation that I was in. And so I actually got something written from the trustee to explain what the distribution was. I was able to hand that to the custodian, and eventually the cash found its way to my bank, to the brokerage account. But it was a little bit of a battle.
Yeah. I think it just sort of highlights how these things are all sort of like the wild, wild west. So you got to be very, very careful, very cautious, take good notes. The other thing I've noticed about sort of, because we've done a number of these sort of liquidation type situations. I sort of think of them as just like the essence of a cigar butt, if you're doing it. But sort of as these things sort of disappear, you know, there aren't a lot of folks that are writing the postscript to these stories so that they're well understood. There's a lot of tribal knowledge as it relates to these sorts of things. And when you've seen one, my experience is that when you've seen one, you've seen one. You know, the process tends to be somewhat similar, but sort of all the various iterations and permutations of how these things can play out can be kind of different. And so, you know, it's a, you know, like I said, for us, these are things that we only do personally. And it's for that reason, because, you know, these things can go all sorts of different ways. I think that, you know, we've been one part lucky, and over time, in terms of, you know, some of the experiences that we've had, you know, we've learned a lot, and, you know, it didn't, you know, cost us too much. And so, but when you've seen one of these, you've seen one of these, and, you know, these all kind of have their own little tribal history. And I think you and I, as having done a number of these, we've sort of built up that knowledge bank of experiences that we've had. And we've been pretty good at being able to navigate the process and sort of figure some stuff out.
Yep. Yeah. And then before these companies usually delist, you do have the last chance to get out. And that's kind of your last source of liquidity. But once it delists, you're locked in, for better or for worse. But yeah, you're right. I mean, you don't hear a lot of postmortems on these things. And yeah, there's definitely some tribal knowledge in this space. It's a very nuanced space, and it's very tricky. So just be careful before you enter.
The interesting thing about it is, like, if you start to venture sort of into it a bit, and you meet some of the people, you know, we've met some really, really smart people along the way as a result of sort of being involved in some of these weird things. And so, you know, not only have we learned from the experiences, but we've met some smart people, and they've also either taught us things or helped us learn something, or, you know, whatever. So it was, in terms of, for us, the whole experience of going through it, and not only we're learning things from the primary experience, but we're also sort of building a network of people that we know that are interesting and thoughtful and smart.
Yep. Yeah. Overall, it's been a great experience so far. We'll see what the future has in store.
Well, it's been a good experience when you take it in the full broadest context of everything that's gone on. You know, some of these aren't worth the trouble. Some of the, I would say that.
For a later episode.
We've had some experience. What's that?
I said for a later episode we could talk about that.
Oh, maybe, I don't know. But a lot of these aren't worth the trouble. And so, you know, we've been sort of a little bit lucky in the sense that we've done an okay job at navigating this.
Anything else that listeners need to know?
I don't know. Can you think of anything?
Tread carefully, document a lot, know what you're looking at, be careful. Yeah, and that's really it. Do your homework.
Wear gloves.
Yeah.
Yeah.
Wear gloves.
Wear gloves.
Thanks, Bobby. Okay, you want to take us home, Eric?
Sure. Thank you, everyone, for listening. I hope you enjoyed this. Like I said, we've been involved in a couple of bankruptcy situations. They're all kind of unique in their own right. We'll talk about a few others in later episodes. Thank you again for listening. Remember to check us out on our blog, www.accretovalpartners.com. We're available anywhere podcasts are available. Feel free to rate and review us. You can find us at inthemarkettrenches.podbean.com. You can find us at snn.network. You can find us on the SNN YouTube channel. That's youtube.com/SNNwire. Thanks again for everyone for listening to us. We really enjoy doing these. We look forward to sharing next week's episode with you. We're going to have a guest for you next week. Really excited to have him on. So thank you so much. Gary, anything else? Is that a wrap?
I have nothing to add.
All right, that's a wrap. Talk to you guys next week.
The information in this podcast is educational in general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.